Welcome back. Well, for all the talk about housing affordability, do we even agree on what that means? Economist Charles St. Arnaud crunched the data. Here's a look by the numbers. First, it's not fake news. Affordability hasn't been this low in cities like Toronto, Vancouver, Montreal, Ottawa, and Winnipeg in more than 40 years. Only Calgary and Edmonton can claim to be affordable based on historical measures. Affordability is defined as a mortgage-to-income ratio of 25%, so that total housing costs, including living costs like taxes, insurance, and heat, are below 30% of income. For affordability to return to its long-term national average, home prices would have to decline by 40% across the country. In Toronto, 51%, Vancouver, 46%, and in Calgary, 20%. But if mortgage rates return to 4%, which is closer to the long-term average, house prices would only need to decline 26% nationally to make them affordable again. Conversely, affordability could be restored if our incomes rose, but they'd have to rise 66% nationally. That would take 10.4 years if they rose 4% a year. But at the lower mortgage rate, incomes would only need to rise 36% nationally to restore affordability. Assuming incomes rose 4% a year, that's just shy of 8 years. But again, the picture varies by city. In Toronto, incomes would have to rise 70%, while in Montreal, just 4%, and Ottawa, only 1%. In Calgary, Edmonton, and Winnipeg, no increase would be needed as mortgage payments fell below 25% of current income. The bottom line on housing affordability is that unless prices correct near term, the solution could take years to arrive. Charles St. Arnaud is chief economist at Alberta Central. Charles, thanks for being with us.
Thank you for having me.
So this is an important piece, I think, of this conversation because we talk a lot about the supply-demand scenario. There's all kinds of talk about the millions of homes needed to beef up the supply side of it. That is a long-term solution. When you look at this data and what would be required to get us back to affordability, what do you think is the most likely outcome to help improve the situation?
Well, I think what this study is showing is that we have two paths, a rapid path where we have big and quick house price decline, which is very unlikely. That's the path that most homeowner and policymakers will want to follow considering some of the costs. Or it's the very long and slow adjustment that's going through income while house prices are staying at the level where they are currently. But that also have some costs on the economy. Mm-hmm. So it's not clear which one is the best.
It seems, so whether it's the best or whether it happens whether we want it to or not, it does seem as though a correction in house prices would be the quickest way. Historically, it would be the thing we would expect in a way. However, we do then come back to the supply-demand problem, which is that we don't have enough homes. It seems hard to see how prices can correct in that scenario.
Yeah, and that's part of it, is that you can see that we know there's a housing shortage. We need to build, as CMHC was saying, 5.2 million new houses over the next decade to bring back affordability. So the question is, how quickly can we build those houses? But it also shows that it will take time. So if we're not building quickly enough and prices don't stabilize, we're talking about more than a decade of adjustment before we get back to affordability.
So then that brings us to, and this is something I don't think we talk enough about, which is perhaps incomes have to be materially higher than they are, Charles. Perhaps we're living in a costlier world than a lot of businesses have kind of priced in for the long term.
Yeah, I think it's an interesting solution, but at the same time, we have to look at other piece of the puzzle. Our labor productivity is negative. It will be very hard to justify a higher income in a situation where we're in a declining productivity situation. So it's all linked to each other. So it's highly complex, and I think policymakers really need to look at all the pieces together and all the various costs that are implied before taking decisions.
And I do want to ask you about the enormous variability between cities. We have now policies at the federal level. We have provincial policies that direct tax dollars to support this problem. Some places don't have the problem, particularly not a meaningful one. Are they paying a price for something they're not participating in?
Well, you can imagine that, for example, Calgary and Edmonton being more affordable, you're seeing actually that affordability being eroded very rapidly. We've had house prices in Calgary that have not declined compared to the rest of the country over the past 2 years. And that's because we're seeing a huge inflow of migration from other provinces. So we've seen the data. A lot of people from BC and Ontario are moving to Alberta to find cheaper house prices, and that's putting strains on the local markets.
Charles, so good to have you. Appreciate your time.
Thank you for having me.
Charles Sardone is chief economist at Alberta Central. With rates still high, a lot of developers are worried about financing new construction at the very time we need them to be building millions of new homes. Kevin Lee is CEO of the Canadian Home Builders Association. Kevin, thanks for being with us.
Thanks for having me.
And the Home Builders Association has some thoughts about what might change to help create an atmosphere to build more. That's one piece of the equation here. What do you think is the most important thing that could change?
Well, I think that's a tough question because it's so complex and so many things need to happen. But one of the things, in addition to labor, development taxes, getting rid of barriers at the local level, one of the things we're really focused on is how do we get buyers back into the market? Because if we're going to build 5.8 million homes over the next decade, that can't happen unless people can enter the market. So one of our big recommendations right now is to get 30-year amortization periods for insured mortgages, which is the first-time buyer product, as you know, really, and but to restrict it to new construction, because there has been some concern about, increasing demand in a supply-constrained market. And so by just doing it for new construction, we could support new supply, encourage actual new development without causing undue stress or driving up house prices or anything like that.
We've seen this analysis of affordability that suggests either home prices have to come way down or incomes have to go quite a bit higher in order to get us there, or we have to wait an awful long time for the supply-demand scenario to level itself. What do you think about that? If the analysis suggests we might have to see existing home stock value drop in order to create an affordability solution?
Well, I think the likelihood of that happening is pretty low, right? Which is why you need that comprehensive approach. I mean, it's going to take time to build out more supply, and that really is one of the key pieces. I think there's a lot of action right now in an attempt to help lower costs, and that would be great. It's got to come from a variety of different means, including ideally lower development taxes at the municipal level and faster permitting, so we don't have the increased costs of carrying construction costs for that much longer. But I can't imagine we're going to get to a point where house prices are coming down to make that huge difference. And as we know, it takes a while for incomes to go up. So it does. It's all hands on deck, including giving people access to a better mortgage system, especially for first-time buyers.
And of course, one place we saw the complexity this week is this whole question of the role immigration plays. On the one hand, of course, that is more demand. It puts pressure on the supply. But on the other hand, as the immigration minister says, that's where you get some of the labor you're looking for. And that was one of the reasons to increase some of the pool of new immigrants. Is that sort of an example of the kind of hard questions we have to ask here?
It is, and it is complex, and you can talk to any industry, as I know you do, and everybody's really in need of more workers, and residential construction is no different. I think one of the things that we're talking about with immigration is we really need to front load that immigration system right now with more people who can contribute to building more homes. And so there are some tweaks that are necessary, because right now the system isn't well geared towards the residential construction industry, but if we get all these immigrants, we do need places for them to live, and we already have our housing supply deficit. So we need to make sure a good chunk of those can really contribute to building more houses. That'll be essential.
Kevin, so good to have your voice for this. Appreciate it.
Anytime. Thanks.
Kevin Lee is CEO of the Canadian Home Builders Association. Coming up, there are still huge barriers to trade between Canadian provinces. How that hurts all of us, that's still ahead. But first, even before the Super Bowl, online wagers on football were spiking in Canada. In Ontario, a 50% jump year over year came before betting on the big game. That's according to data from iGaming Ontario. $1.4 billion was bet on football since last April. Starting next week, don't look for famous faces like Wayne Gretzky promoting gambling in Ontario. They will be banned in an effort to protect people from being drawn in. But even for the adults, the debate will rage. Is gambling entertainment or a waste of money? Place your bets here. Back after this.